On a day when traditional stock markets are experiencing a downturn, the cryptocurrency sector is witnessing a notable surge, particularly with Bitcoin prices climbing by 2.63% to reach $87,172.57. This divergence in market behavior raises intriguing questions about the forces at play in the financial landscape. As investors grapple with the latest economic signals, a combination of geopolitical tensions and shifting monetary policies appears to be steering capital towards digital assets despite the broader market struggles. The recent uptick in cryptocurrency prices comes amid growing discontent with conventional financial systems, particularly in light of ongoing conflicts between President Donald Trump and Federal Reserve Chair Jerome Powell. Analysts suggest that Trump's vocal support for cryptocurrencies, coupled with his administration's pro-crypto stance, is attracting investment back into the digital asset space. The crypto market is increasingly seen as a hedge against traditional financial instability, noted one financial analyst. As the dollar weakens, investors are looking for alternative stores of value. In a related development, crypto firms have made headlines due to their significant financial contributions to Trump's inauguration, totaling $18 million. Ripple Labs, a prominent player in the crypto industry, led the donations with $4.9 million, highlighting the growing intertwining of politics and digital currencies. The crypto sector is aligning itself with those who support its growth, said Ben Weiss, a reporter on the matter. This financial backing comes against a backdrop of stringent regulatory scrutiny from the SEC under previous administrations, which had led to a cautious approach from many investors. The ramifications of these developments extend beyond mere price fluctuations. As cryptocurrencies gain traction, traditional financial institutions are beginning to take notice. The Wall Street Journal recently reported that crypto companies are knocking on the doors of banks that previously shunned them, indicating a potential shift in the banking landscape. This evolving relationship could pave the way for greater integration of cryptocurrencies into mainstream finance as institutions seek to capitalize on the burgeoning digital economy. Moreover, in a show of solidarity, the Los Angeles Kings hockey team recently honored the Los Angeles Fire Department (LAFD) by replacing their center ice logo with the LAFD emblem during a game. This gesture comes on the heels of devastating wildfires that have affected Southern California, demonstrating the role of community and corporate responsibility amid crises. Penguins captain Sidney Crosby commented on the importance of supporting local heroes, stating, "Anything we can do to show our support, it's inspiring to us." Such initiatives reflect a growing trend among sports franchises and brands to engage more deeply with their communities. As the cryptocurrency market continues to evolve, all eyes will be on how it navigates the intersection of politics, regulation, and traditional finance. With the potential for further price increases and a more favorable regulatory environment under the current administration, the future appears bright for digital assets. Whether this upward trajectory will sustain itself amid ongoing market volatility remains to be seen, but the increasing dynamics between cryptocurrencies and established financial systems signal a transformative era on the horizon. Investors and stakeholders alike will be watching closely as developments unfold, eager to see how this digital revolution shapes the economy in the months and years to come. In a striking divergence from traditional financial markets, Bitcoin has recently exhibited resilient gains, bolstered by a weakening US dollar and growing political pressures. As of April 21, 2025, the price of Bitcoin surged past the $88,000 mark, demonstrating its ability to decouple from the stock market trends that have heavily influenced its trajectory in the past. The cryptocurrency's rally comes against a backdrop of declining stock values and an increasingly aggressive stance by former President Donald Trump against Federal Reserve Chair Jerome Powell, which has further pressured the dollar. Bitcoin's rise is particularly notable as it contrasts sharply with the performance of major stock indices, which have faced downward trends. This shift can be attributed to several intertwined factors, including macroeconomic sentiment and geopolitical developments. According to a recent report by CNBC, the dollar has plummeted to a three-year low, a situation exacerbated by Trump's public criticism of Powell's monetary policy. The dollar's weakness has traditionally been seen as a favorable tailwind for Bitcoin and other cryptocurrencies as investors look for alternative stores of value, remarked an analyst from CoinFund. Moreover, the implications of Bitcoin's gains extend beyond mere price appreciation. They signal a potential shift in investor sentiment where digital assets are increasingly regarded as a hedge against currency devaluation. This sentiment is echoed in the growing interest from institutional investors who are beginning to view Bitcoin not just as a speculative investment but as a legitimate asset class. MicroStrategy, a company known for its aggressive Bitcoin acquisition strategy, has seen its stock prices rise as a result of its cryptocurrency investments, although analysts suggest that these purchases have had a minimal direct impact on Bitcoin's overall price movements. Interestingly, while Bitcoin flourishes, other cryptocurrencies have not necessarily followed suit. Ethereum, for example, faced a decline, highlighting the volatility and unpredictability that characterizes the broader crypto market. This divergence raises questions about the future dynamics of cryptocurrency trading, especially as regulatory scrutiny increases globally. As Bitcoin continues to gain ground, the conversation around its integration into mainstream finance is intensifying. Experts predict that the cryptocurrency market will witness further developments as institutional adoption increases and as more retail investors look to cryptocurrency as a viable investment option. With the ongoing geopolitical uncertainties and fluctuating economic indicators, Bitcoin's role as a potential safe haven asset may become even more pronounced moving forward. In conclusion, Bitcoin's recent performance amid a weakening dollar and declining stock prices illustrates the cryptocurrency's evolving role in the financial landscape. As investors reassess their portfolios in light of macroeconomic shifts, Bitcoin's journey appears to be just beginning, and its future will likely be shaped by a combination of regulatory developments, technological advancements, and changing investor sentiments. The coming weeks and months will be pivotal as the market navigates these complexities, and observers will be keenly watching for further signs of Bitcoin's maturation as a mainstream financial asset. In the ever-shifting landscape of cryptocurrency, few tokens have captured public attention quite like the dollar Trump coin. Launched amidst a wave of speculation and controversy, it has become emblematic of the intersection between politics and digital finance. As of April 21, 2025, this controversial meme coin has defied expectations, maintaining a surprising stability despite looming threats that could have sent its value plummeting. Since its inception, the dollar Trump coin has been a source of debate among crypto enthusiasts and skeptics alike. Described as a token with no intrinsic value other than speculation on President Trump's political future, the coin's journey has been tumultuous. Reports indicate that its creators significantly profited, amassing around $100 million in fees, while investors who bought into the hype have seen their holdings lose over $2 billion in value since the coin's peak earlier this year. Just last week, the coin faced a precarious moment as approximately 40 million new tokens were set to enter circulation, representing 20% of its existing supply. Analysts warned that if these tokens were sold off, the price could collapse, exacerbating an already steep decline that had seen values drop by over 90% since January. However, contrary to the predictions of doom, the dollar Trump coin's price actually saw a modest uptick over the weekend. Observers noted that two companies linked to Trump, CIC Digital LLC and Fight LLC, controlled 80% of the incoming supply. This created a unique dynamic. Selling off the new tokens would not only hurt investors but also diminish the potential earnings of the companies themselves. It's a classic case of self-preservation, explained a market analyst, suggesting that this might be a temporary reprieve for the coin, which currently holds a market cap of $1.67 billion. Adding to the complexities surrounding the dollar Trump coin, the cryptocurrency market at large experienced a resurgence as Bitcoin climbed to nearly $88,000, a figure not seen since Trump's controversial Liberation Day. This increase coincided with Trump's ongoing feud with Federal Reserve Chair Jerome Powell, as the president criticized Powell for not swiftly cutting interest rates. Nicholas Roberts Hundley, CEO of Concrete and Glow Finance, noted Bitcoin's move above $87,000 signals that investors are seeking refuge in decentralized assets amid rising tariffs and inflation concerns. Trump's public remarks about Powell have raised questions regarding the independence of the Federal Reserve, a critical element of U.S. economic policy. The political undertones of Trump's rhetoric have led some investors to view cryptocurrencies as safer havens detached from centralized control. While Bitcoin often tracks with equities initially, it can serve as a refuge from geopolitical pressures in the long run, observed Yue Yang, chief economist at BitMining. As the dollar Trump coin navigates these turbulent waters, it appears to be part of a broader trend where political events significantly influence the cryptocurrency market. With the potential for a new venture, a real estate-themed video game that integrates cryptocurrency with Trump's well-known affinity for Monopoly, there is no telling how the narrative will evolve. The coming months will likely reveal whether the dollar Trump coin can sustain its value amidst ongoing speculation and market fluctuations. This unique blend of politics and digital currency not only illustrates the unpredictable nature of the crypto market but also underscores the significant impact of political events on economic sentiments. As investors and analysts keep a close eye on both the dollar Trump coin and the broader cryptocurrency landscape, one thing is clear: the intersection of politics and finance will continue to be a captivating arena rife with opportunities and risks alike. Ethereum, the second largest cryptocurrency by market capitalization, finds itself at a critical juncture in 2025, facing challenges that have led to a staggering decline in its value. As of April 21, the cryptocurrency has seen its price drop over 50% year-to-date, raising questions about its future as a cornerstone of decentralized finance. DeFi, once celebrated as a revolutionary platform, Ethereum's current trajectory suggests a steep uphill battle to reclaim its former glory amidst mounting competition and market volatility. The decline of Ethereum can be attributed to several interrelated factors. One of the most pressing issues has been the rise of Layer 2 scaling solutions such as Arbitrum Optimism and zkSA and Sierra. Originally designed to alleviate Ethereum's scalability challenges, these networks have inadvertently siphoned off transaction fees from the main Ethereum chain. When users opt to transact on Layer 2 networks, the revenue that would typically bolster Ethereum's economic model is redirected, creating a significant revenue problem. While introducing fees for Layer 2 transactions might seem like a viable solution, doing so could counteract the primary purpose of these networks: to lower costs and improve efficiency. This dilemma has left Ethereum grappling with an economic model that is increasingly under pressure. Adding to Ethereum's woes is the broader market context. The cryptocurrency sector has faced headwinds, with Bitcoin also experiencing a 10% decline year-to-date, reflecting a general risk-off sentiment among investors. This trend has been exacerbated by geopolitical tensions and trade disputes, which have pushed many investors away from speculative assets and towards safer investments. According to analysts, this macroeconomic uncertainty significantly affects Ethereum's appeal, making it a less attractive option for both institutional and retail investors. Moreover, competition within the blockchain space has intensified, with investors increasingly diverting funds to alternative projects boasting superior technological capabilities or potential returns. Ethereum's market share is at risk. The potential approval of an exchange-traded fund ETF for Ripple's XRP could further exacerbate this situation. Should XRP gain approval and manage to capture investor interest, it could surpass Ethereum, fundamentally altering the cryptocurrency landscape. Despite these challenges, Ethereum still possesses a robust developer community and continues to support thousands of decentralized applications. Proponents of the platform point to upcoming technological advancements, including improvements to the proof-of-stake consensus mechanism, as potential catalysts for recovery. Notably, the recent establishment of a staking-enabled ETF for Ethereum in Hong Kong could provide new avenues for growth. Staking allows users to lock their ETH to help secure the network, thereby earning rewards while simultaneously contributing to its stability. However, The competitive pressures and the need for a compelling growth narrative remain significant hurdles. As Andy Bear, head of product at CoinDesk Indices, noted, Ethereum has yet to articulate a clear growth story for this cycle, positioning it at a disadvantage against its competitors. With its performance ranking among the CoinDesk 20 placing it in 16th position and down 53% this year, Ethereum's status as a leader in the crypto space is increasingly being questioned. The Ethereum Foundation has recognized the need for a strategic shift, particularly in light of its recent leadership changes aimed at enhancing user experience and addressing Layer 1 scaling challenges. Co-executive director Tomasz Stanchak emphasized the importance of allowing co-founder Vitalik Buterin to focus on research and long-term advancements rather than daily operational issues. This strategic pivot may help realign the community's efforts and reinvigorate interest in the platform. As the cryptocurrency landscape continues to evolve, Ethereum's current struggles serve as a stark reminder of the volatility inherent in blockchain technologies and the challenges of maintaining market leadership. Looking ahead, the ability of Ethereum to innovate and adapt to a rapidly changing environment will be crucial in determining whether it can regain its status as a foundational pillar of decentralized finance or if it will succumb to the pressures of a competitive marketplace. The coming months will be pivotal in shaping the future of this once celebrated crypto asset. In a significant move reflecting the growing intersection of traditional finance and cryptocurrency, Upexi Incorporated announced on April 21, 2025 its plans to raise $100 million primarily aimed at accumulating the cryptocurrency Solana. This initiative marks a pivotal shift for the consumer product company, which seeks to diversify its portfolio by integrating digital assets into its operations. Upexi's announcement came with a detailed breakdown of its funding strategy. While $5.3 million will be allocated for working capital and debt reduction, the majority of the raised funds will support the establishment of a Solana treasury and bolster its accumulation of the cryptocurrency. The offering is set to close around April 24, 2025, contingent upon customary closing conditions. The involvement of GSR, a prominent crypto trading and investment firm, as the lead investor in this private placement, underscores the increasing demand for secure access to high-quality crypto assets within public markets. Brian Ruddick, GSR's head of research, commented, "This investment highlights the growing demand for efficient, secure access to high-quality crypto assets in public markets. Solana's speed, scalability, and vibrant developer ecosystem make it an ideal foundation for long-term growth." Lily Liu, president of the Solana Foundation, echoed this sentiment, noting that Upexi's foray into Solana signifies a burgeoning interest in utilizing blockchain infrastructure for real-world financial applications. "It's encouraging to see institutions exploring blockchain infrastructure in meaningful ways," she remarked. The momentum around Solana has been gaining traction, evidenced by its recent price movements. As of April 21, Solana's trading price had reached $138.21, a 3.55% increase over the past week, fueled by the bullish headlines surrounding institutional investments and staking opportunities. The staking market capitalization for Solana briefly overtook Ethereum's, driven by a higher staking yield and a sizable portion of its circulating supply currently staked. This shift to Solana comes at a time when several companies are exploring the integration of cryptocurrencies into their financial strategies. Notably, firms like MicroStrategy and GameStop have already incorporated Bitcoin into their balance sheets, while others are considering the potential of digital assets as both investment vehicles and transactional assets. Upexi's approach aligns with broader trends within the cryptocurrency market, where institutional interest is increasingly evident. For instance, Janover, a commercial real estate platform, recently announced plans to accelerate its acquisition of digital assets in the Solana ecosystem following a successful fundraising round. This growing interest from various sectors indicates a maturation of the crypto landscape, with institutions recognizing the strategic advantages of incorporating digital currencies. Looking ahead, Upexi's commitment to Solana and the broader embrace of cryptocurrencies by institutional players could potentially reshape the financial landscape. As companies navigate regulatory environments and adapt to new technologies, the prospect of a more integrated financial ecosystem appears imminent. The ongoing developments surrounding Solana, coupled with Upexi's ambitious treasury strategy, suggest that digital assets will play an increasingly central role in corporate finance in the coming years.